Welcome to the second season of Ventures and Visionaries, episode 2, Our Financial Future. This podcast is about vision and entrepreneurship, or in other words, business and innovation. I'm your host, Morty Hackle. Welcome to the show. Today, I'm very excited for our discussion. Our guest is Michael Moro, Chief Strategy Officer at INX and a true expert on how the blockchain transforms businesses. Welcome, Michael.
Thank you, Morty. Happy to be here. Thanks for having me.
Thank you. How are you doing today?
I'm doing very well. How are you?
Good. And I'm so happy that we had an opportunity to speak over here. I'm really anticipating us and the audience to be educated on the blockchain. And from somebody as yourself, who's been in this world for a very, very long time, this can almost be a masterclass for us. So I'm really, really excited and grateful. Thank you.
I'm thrilled to be here, and hopefully I could do your kind of kind statement justice here during the course of our podcast.
I'm sure, and then some. Maybe give us a little bit of background on you and where you came from and how you got into the world of blockchain, and we'll take it from there.
Happy to do it. So I'll call myself a reformed investment banker. I joined Wall Street right after college in 2001. I joined Citi's investment banking division. And I was there at Citi for the first 7.5 years of my career, really kind of learning the ins and outs of corporate finance and how Wall Street works and how companies get funded and things of that sort. And then in 2008, I left Citi and I jumped entirely into the other end of the spectrum in the world of startups. I left a 330,000 people organization. And then I became like employee number 30 at a startup called Second Market. This was in the fall of 2008. And a few years into my journey at Second Market, the founder and CEO of Second Market, Barry Silbert, personally discovered Bitcoin, took a personal interest in it. And then in 2012, he would come into the office every day and just talk about Bitcoin. I would ask him how his weekend was, and he'd be like, "Oh, well, Bitcoin did this." And I said, "Barry, I didn't ask you about Bitcoin. I asked how your weekend was. What did you do?" And so one day, I think we sat him down and said, "Hey, either you stop talking about Bitcoin because we're kind of getting annoyed, or tell us what it is, right?" And this was really a time in which if you Googled Bitcoin in 2012, there were no sort of resources available for non-technical people. It was all for developers and engineers. For the layman, for the business folks, it was a completely different language. And so we really had to get that tutorial on what Bitcoin was. And as Barry kind of explained it to us, we said, all right, maybe this could be it. And so we started actually trading Bitcoin in early 2013. Kind of creating the first over-the-counter institutional trading desk for Bitcoin at a time in which no one was doing this. And certainly kind of happy to kind of get into that story a little bit later. But that took me down into the crypto journey, which led me to being CEO of a company called Genesis. I was there for about 10 years. And then in 2022, I left. And then I've had a couple of other positions in the derivatives exchange. And for about the past year, I've served as the chief strategy officer at a company called INX, which is, think of it as a NASDAQ 2.0 that trades tokenized forms of stocks and bonds and funds alongside a crypto exchange. In the idea of why do you need two different accounts to buy Bitcoin and a stock? Why couldn't you do this under one platform? So that's kind of what INX currently represents.
That's really, really cool. And thank you for sharing your story. I think you and I overlapped in some of these, in some of those days. And those days were certainly super exciting. Maybe can you share some of the early challenges and a couple of war stories just to give us a little bit of a flavor of what I'm going to call it the Wild Wild West was in 2012 or 2013. Today's show is sponsored in part by Pax8. Technology is evolving, and Pax8 is here to help you stay at the forefront of change. Using the power of data and AI, MSPs can take advantage of what the future holds. Pax8 lives at the intersection of community, education, and marketplace innovation. And whatever your goal is, will get you there. Get started at pax8.com. That's PAX number 8.com.
Happy to. So, think, when we got started in 2013, Bitcoin was somewhere between $80 to $100, right? And obviously, the initial adopters of things like Bitcoin were the cypherpunks, right? Who massive mistrusts of the government following the 08, 09 financial crisis. And so you had that camp, and frankly, you had early adopters and criminals, right, that were trying to kind of skirt the existing financial controls that the system had in place. And for us to create a market, a trading desk to trade Bitcoin, we had to kind of get into that community, especially with the cypherpunks, because they were the holders of Bitcoin, and we had to convince them to sell to us, right? And the challenges were, hey, we were a regulated broker dealer, so we needed to do AML KYC requirements on all of these people, who, and many of them, especially early on, refused to turn over any photo ID, government ID, things of that, convinced that we were, quote unquote, the man. And that we would immediately turn around and send their photo ID or social security number to the government, right? And so that was a very difficult community to certainly kind of crack into. On the other hand, we were trying to be an institutional trading desk. No institutions were interested in buying Bitcoin in 2013. So we dealt with a ton of unresponded to emails, hangups on phone calls, and nobody kind of took Bitcoin seriously, right? And so early on, we had no sellers, we had no buyers, and then trying to kind of create a marketplace was certainly a challenge. And it's and the possibility that Bitcoin would go to zero was real, right? Today, we might kind of laugh at that notion, kind of giving how much we've kind of grown, but the idea of Bitcoin eventually going to zero was a very real possibility. And so certainly I remember about a year after we launched the trading desk, Mt. Gox, the exchange in Japan, was hacked, sending kind of the price of Bitcoin tailing down, right? In 2013, the price of Bitcoin went from under 100 to 12 or 1300 throughout the year. So we saw meteoric rise in the price. And then Mt. Gox gets hacked, and naturally the price of Bitcoin kind of comes tumbling down. And I really felt at that point in time that this was it. All right, this was fun, good experiment. Bitcoin's going to zero, right? Let's try something else. But when Bitcoin didn't, go to zero, I think that was kind of the first indicator of maybe there's something here, right? Maybe the tulip narrative didn't hold, because there was resiliency and a bounce back in a real use case. So that's kind of one story. And two, in the early days, we would have people show up at our office, and knock on the door and say, hey, I hear you guys sell Bitcoin. Can I buy some? And see, of course, you can buy some. But naturally, they would refuse to turn over any forms of ID to identify themselves. They wanted to stay under the radar. We had one gentleman actually show up at our office with a suitcase full of cash, and says, hey, I want to buy Bitcoin. Here's my proof of funds. And you'd open up the suitcase and stacks of hundreds,
Wow.
um, in his briefcase that was handcuffed to his wrist. And we said, hey, like, we don't do cash transactions, and you'd obviously have to onboard and give us photo ID and all of that stuff. Like, stories like that made me like, what did we get ourselves into? Right? Like, what is this thing? Were certainly strong kind of core memories that I have from the early days.
When did you truly feel like there was a pivot from it being an experiment, even with legs and sustainability, but it's really now a business?
I mean, after so I mentioned the collapse of Mount Gox in early 2014. From there, for the next 3 years, it was a struggle. And there was almost no interest whatsoever from investors. No like news publications on TV. No one was talking about Bitcoin. Google searches on Bitcoin were way down, and so we were like, "This is anything going to ever happen here?" Right? And ironically, 2017 was kind of the real kickstart. And if you recall, Ethereum wasn't around when we first got started, but it had been born kind of in the meantime. And 2017 was the Ethereum ICO boom, right? Kind of the initial coin offerings and kind of explosion of projects kind of built around Ethereum. And that was a massive point for an inflection point for us, not just because Ethereum exploding kind of drove the price of everything, including kind of Bitcoin up, but I think the amount of like retail interest in projects exploded. And naturally, when a financial asset moves like that, the media picked it up, right? And so we went from this thing became, hey, no one's talking about this thing. Is everything going to come out to like daily mentions of Bitcoin price and Ethereum price as well as projects? The conference circuit blew up, right? And different events were happening and whatnot. And so it started out as kind of a niche thing that no one kind of really paid attention to from enthusiasts. And started to reach the mainstream kind of following 2017. And the last 2 months of 2017 were some of the busiest months that we certainly have experienced in terms of transaction volume and interest and whatnot. And I remember, we were only like 8 or 9 employees at the time, and just struggling to meet all of the demand that we experienced at the time.
That's crazy. Maybe now at this point, let's fast forward into present day and let's talk a little bit about, your current role with INX. And if I'm understanding correctly, one of the big innovations is around the how to use tokens. And maybe we start from the beginning. Like, what is that for all the people who don't know? And like, what is your vision for these types of technologies?
So it's funny. After the ICO boom happened in 2017, um, I think there were lots of people who certainly envisioned that, hey, yes, crypto is kind of the initial use case of blockchain technology, but how else can we apply that technology, right? How do we take blockchain and kind of incorporate that into existing financial asset classes? And naturally, people focused on stocks and bonds. How do we put traditional securities on chain? And what are the benefits and the drawbacks of ultimately kind of like doing that, right? And obviously, kind of the largest is kind of settlement and efficiency around putting things on a centralized ledger, as opposed to each company in the chain of transactions and to settlement maintaining their own separate databases. Why not just, if we can all point to one database that is verified and an immutable ledger, wouldn't that be the easiest kind of solution for everybody? And another one was real estate, right? Like, why do we need things like title insurance to actually prove that the previous owner held the property properly? But if you could go to the blockchain and see who held the actual title to the property, wouldn't that be a much more efficient system to doing? So I think initially, I think people thought, hey, here are the use cases, here's what ultimately happens, here are the benefits. The reality is the crypto world moved at warp speed. But stocks, bonds, real estate are the more kind of traditional financial assets, and they tend to move a lot slower. The reality of is it certainly moves a lot slower, and especially when it comes to stocks and bonds, they are played with by the largest banks in the world, the most regulated institutions, the largest asset managers, and they are certainly open to innovation, but they're, like I said, they're highly regulated, and they can't just freely start to kind of do things and experiment in a way that crypto startups are able to. So it took time for putting things on chain to ultimately happen. A big breakthrough happened in 2024, where companies like BlackRock and Franklin Templeton started to tokenize money market funds. Interest rates were high, And they were trying to figure out, is there a way to put traditional money market funds, with typically boring things that invest in US treasuries, but as a safe asset, put those on chain, and then make them more investable, more efficient, and to be used as collateral, as good collateral, to do all kinds of financial leverage and whatnot. And so the creation of products by traditional asset managers really kind of changed the game, to a point where now tokenized assets, tokenized real estate, are slowly becoming a multi-billion-dollar asset class, and where it was absolutely nothing just a few years ago. And so now we're in a position where, okay, there we have tokenized treasuries, gold, silver, we have commodities starting to be on chain. Private equity funds are now starting to kind of come on chain. And we're starting to see pockets of innovation around stocks and bonds and putting them ultimately on chain, largely for efficiency reasons. And directionally speaking, everything is becoming more digitized anyway, right? Initially, you had physical stock certificates. That's kind of where we started.
Mhm.
We've gone now to book entry form, where it's just a ledger and a database that people keep, to maintain records of who owns what. Those records will ultimately end up on blockchain, so that settlement efficiency, things like that, is going to happen at a much, much faster speed, saving costs for everybody in the ecosystem.
Is there value to the token itself, or it's merely a representative of the underlying asset value?
So I think what is happening today is you take a stock today, you buy a stock, and then you put that stock at a trustee, right? It's being held somewhere at a bank. And then you create a token, that represents that share that is sitting in a trustee's vault. Okay. So it is a digital twin. It behaves exactly like the underlying, has all the characteristics and voting rights and dividend rights and all of that of the underlying, but the token actually just moves on chain, from holder to holder, while the share itself is sitting with a bank, right? This, to me, is an interim step. In the future, I don't believe kind of that vault underlying exists, and that it only exists on chain. It will be natively issued on chain, and that the tokenized form of Apple share or Nvidia share or Coinbase share, right, only exists actually on chain, and we kind of move away from that DTC book entry form that kind of exists today.
So if I'm a company and I want to issue shares, instead of issuing shares, I might issue tokens.
That's exactly what we do. And now you're still issuing shares. It's just the form of the share is now a tokenized form of it, as opposed to kind of the traditional DTC book entry form.
And does this, in your mind, have a big impact on the investment banking world, or
I mean, I think, look, the this is all happening, as we've seen incredible enhancements in areas of AI, right? And automation kind of happening throughout the entire chain. And I think traditional, I'll call them financial middlemen, as well as lawyers, law firms, are in a process of being like incredibly disrupted, as through the convergence of blockchain technology becoming more mainstream, as well as kind of the maturation of AI. And the whole promise of a lot of crypto and blockchain is kind of that direct to user, right? Let's cut out a lot of the middlemen, and kind of go directly from issuer to investor without a lot of legal stops kind of along the way. And so yes, I think the traditional capital formation, and investment banking businesses have already started to frankly be disrupted. And what does the final form certainly look like? I don't know, but we've seen smart contracts, right? Contracts are now being written by coders instead of lawyers. And I think we'll continue to see different forms of smart contracts and on chain, where there's no human kind of there. The contract is just there on the internet to be interacted with. But we have to kind of get to a point though where smart contracts itself is good in a court of law. right? Where judges and lawyers are able to opine on the validity of smart contracts in a legal setting, as opposed to kind of a blockchain setting. Um, and I always find it fascinating because if a coder puts a smart contract on chain, and then something goes wrong, who's liable? Right? Who is the legal counterparty? And typically in smart contracts, there's no company, right? It's just code on the internet. And so I'm really kind of fascinated to see, especially institutions who typically like traditional legal contracts, because if something goes wrong, you can point a finger at somebody and say, you messed up. I'm taking you to court. How do you do that in a smart contract situation? Is a fascinating development. I think that'll come in the next few years.
So you spoke a little bit about the AI side, and obviously in today's world, we'd be remiss to not touch upon that a little bit more. Maybe can you expand a little bit on how you're seeing use cases of LLMs and all the rest of their counterparties interacting with the blockchain, and how is that speeding things up? Is it just forking the entire thing? Like, how is this all going?
I think in my mind, we're still way too early to kind of think about true economies of scale. And, we haven't really seen it because we're still in a world where new layer one blockchains are still being launched, right? We are still in a world where new stable coins are still being issued. And I feel like we're getting to a point where the average user, customer, investor have too many choices. And The winners of what kind of the lasting layer one blockchain, we don't know who that is yet, right? And certainly some blockchains are good for some things. So do we actually end up in a world where for this use case, you use that blockchain, for that use case, you use that blockchain, and then come up with like domain specific blockchains in which economies of scale can certainly develop at that level? Or is there like one chain for everything, right? And yes, that would be great for everybody, but obviously to kind of build that level of blockchain is incredibly kind of challenging to be able to do. And so I think that we're in a world where we're still kind of trying to figure out the actual efficiencies that ultimately come of it. The true economies of scale, in my mind, has not yet been at the product level, but it's at the knowledge level. Now everyone, when we first started, no one knew who a Bitcoin was, right? And we would now come to a point in 2025 where like we have plenty of ETFs, laws are being written, we have pro Bitcoin government here in the US. And so people no longer find Bitcoin to be an esoteric asset, right? It is a part of an average person's investment portfolio. And so I feel like, and the concept of having digital wallets has become normal, right? We started with cash, and then we went to credit and debit cards, and now we're moving to the stable coins and tokens. That level of, hey, this is kind of way the world works today. And digital wallets, once people have an understanding of a digital wallet, that economies of scale on the knowledge level of new things that are happening on chain, I think becomes certainly easier for people to understand.
And for people who are not necessarily that savvy, they can certainly use mainstream investment locations and have their digital wallet custodied by somebody else. Is that not correct?
Absolutely, absolutely. But to me, so today, obviously, investors have the option to use a crypto custodian, just in case you don't want to kind of maintain your own wallet. Going forward, I'm trying to think of when my kids are older. Right, my kids are going to grow up. They're young today, but in a world where like Bitcoin exists, Ethereum exists, all these hundreds of tokens exist, and the idea of having your keys to your wallet is going to become normal for them, right? And I can see a world as kind of tokenization picks up, where you can have your own wallet that you control that holds your Apple shares, your S&P 500 shares, and your blockchain and your blockchain assets, all in your digital wallet in a tokenized form. And that'll be perfectly normal, within the next decade.
So, the vision that was talked about, say, a decade ago of, going into a Starbucks and buying a cup of coffee on Bitcoin that doesn't appear to have materialized, you think may materialize, but in a different format.
My guess is it won't be Bitcoin as kind of the payment, right? Obviously, kind of Bitcoin was payments was the initial use case, and the Satoshi white paper and peer-to-peer payments and things of that sort. Today, we're certainly hoping for exemptions to the de minimis tax accounting rule, but today it requires you to think about, hey, what was the price of Bitcoin I bought it at? And what was the price of Bitcoin at the time I spent it to buy the Starbucks coffee?
Uh-huh.
And whether you experienced a gain or a loss, and that difference is a reportable tax event. And so the accounting side is actually what's preventing largely folks from actually being able to kind of spend Bitcoin, right?
So this
To
isn't
kind of keep
even
track of it.
this isn't even about the speed of the blockchain being able to process.
No, not at all. This is more like IRS rules here in the U.S. that asks you to kind of keep track of your cost basis versus when you realized the sale of Bitcoin when you bought the coffee.
And figuring out how to report that is a massive
How do
challenge, I'd imagine.
yeah, how would you keep track of that? I think is a challenge for people.
Right, right. Interesting. Maybe at this point, it's a good idea to pivot since we're talking about, a general use case. And as this becomes much more of a, open and certainly as we think of our children and how they're going to interact with these assets, let's talk about, I guess, from the time where we came with the guy with the suitcase full of cash handcuffed to his wrist to the fact that now this is mainstream. Like, how do, obviously, people clearly trust the asset class because otherwise this wouldn't happen. So, what do you think are the next major hurdles to help improve use and adoption and maybe alleviate or allay fear?
I think you know um, the risks in speculation still remain, right? Today, we see thousands and thousands of crypto tokens, right? From Bitcoin and Ethereum all the way on down. And, I feel like everyone is searching for the next Bitcoin. Like, what is the next asset that'll go from zero to a multi-trillion-dollar thing, in search of almost like a get rich quick, scheme, and trying to kind of find it. And, I'm one of those people where 10, 20 years down the road, it's entirely possible that like there's 5 or 10 meaningful coins, right? If I think of each coin as a startup, right? Obviously, startups, high failure rate, right? We're talking north of 90% of startups and companies that start fail
Yeah.
as a result of funding or not finding, product market fit or whatnot to do it. And so, the fact that north of 95% of these coins might eventually, they may not go to zero, but kind of close to it, is reasonable to me as I kind of think about it, right? And in the safety of trying to like differentiate some of the ones that have that kind of lasting staying power versus the penny stocks, right? Of kind of the crypto is, I think, kind of investor education that I think is extremely necessary to understand kind of the relevant risks of the space that exists today. I think that's kind of like one aspect of it. The other aspect of it, I think, is ultimately is custody, right? I think people still have, rightly so, a here, not necessarily of like being hacked, although that exists, but it's almost like they don't trust themselves, right? I'm going to mess this up. I'm going to forget the password or the private key and lose control of my coins. And for this to become even more mainstream, we have to kind of figure out a way to, hey, how do we not alleviate that risk somehow? How do we make this safer for people? And yes, you could trust a third party to hold it for you, but like that also kind of goes against the ethos of Bitcoin and not your keys, not your coins type of principle, right?
Mhm.
So how do we find kind of the happy medium between self custody and like security and safety? I think those are key elements that ultimately need to be solved for this to get bigger.
Interesting. And do you envision, you mentioned that the US government is Bitcoin friendly today. That has not always been the case. Where do you envision the regulatory side of this going?
So, certainly for the next couple of years, very favorably. You're 100% correct in that the U.S. faced major headwinds from politicians and regulators in the recent past, and we've seen kind of a complete sea change, right? Kind of in the attitude towards Bitcoin and kind of crypto in the new administration. And so, I think for the next few years, I think it'd be very favorable. And obviously, but the question begs itself, like, what happens if the other party wins the next presidential election, right? The kind of the headwinds kind of come back. And which so I think that's why we need to like codify a lot of this into law today. So it's not just like policy and guidance. It's actual law. And so we see things like the stablecoin bill, kind of the Genius Act, and kind of the infrastructure bill, the Clarity Act, that both houses are trying to work on and kind of getting passed. Getting those actually into law will certainly make it difficult, right? For that to kind of be eventually taken away, regardless of who's kind of the next president of the U.S. And so and hopefully where Bitcoin crypto becomes even more normal over the next couple of years to the point where my hope is this is no longer like a political issue, right? It's Bitcoin. It should have no, is it a Republican issue or a Democrat issue? It's a thing for everybody. And it kind of becomes relatively agnostic as to who's in power.
So if I was to think about this for a second and compare it, say, to the way cannabis is dealing with its financial challenges because it's more of a state regulated issue, would you think that being on the federal level would, I don't know, solve is the right word, but that's the right approach for the entire industry?
I think from a compliance perspective, it would be much easier to work with one entity rather than 50, right? And for crypto exchanges, we apply state by state today for money transmitter licenses, and it is extremely expensive and time consuming. And you could have like ongoing audits from multiple states kind of like simultaneously, right? So the maintenance and upkeep of those licenses is extremely cumbersome as well. So in that aspect, having kind of one regulator to work with is would be fantastic, right? And certainly kind of easier to do. And I think so. I think that would be an added positive for sure. I think the challenge is, I think we in the U.S. still need to figure out what is kind of SEC jurisdiction versus what CFTC jurisdiction is. That distinction between what's a security and what is a derivative, I think, has meaningful impacts throughout the entire space. And we talked about, hey, Bitcoin, hey, it's a commodity, right? So, hey, this does not live in kind of like SEC land, but we talked about stocks and bonds earlier. Stocks are securities, but if we tokenize a security today that has an underlying, it is technically a derivative, right? So that would actually sit in CFTC territory. And for tokenized securities, kind of with the digital twin form of an underlying, in my mind, it makes no sense for those two things, which are effectively the same thing, to be traded on two different venues with two different regulators, different sets and rules. And so those two things should be traded by the same parties. Traditional broker dealers in the United States can trade securities, but not tokenized securities under the strict letter of the law here in the US today. So those are some of the elements of, hey, what needs to change for kind of mainstream adoption. Certainly, is kind of that regulatory clarity between two regulators here in the U.S.
Maybe at this point, now we talked a lot about the esoteric side of things. Michael, you've been doing this for a while, and one of the things that I believe in strongly is that, as we evolve our careers, part of our mission should be helping young people and all the rest of people who are either looking to pivot in their career and share with them advice that we have and how to help them think. So, can I just ask you to speak a little bit about some leadership lessons that you've learned as a leader in this industry, and perhaps afterwards, any advice that you would give to anybody looking to enter this, either on the financial side or on the technology side?
Yeah, so I think the number one advice I tend to give new CEOs, entrepreneurs, startups, founders, is the most important thing you could do is to control and have a say on who you bring into the organization. And we all know that screening resumes is very painful. It's time consuming. And obviously, even when you get them in, you have to train them, right? But it is the most valuable time that you can certainly spend, especially early on in the company. And so being intimately involved in the interviewing and screening process of candidates you bring in house is probably the most important thing that you can certainly do in the early days. And that's largely for a few reasons. I mean, especially when you're small, you need people in your organization that share the same goals, the same values, and value the same things in culture that you do. Because as your company ultimately grows, those are the people that are going to become the senior people within your organization, and culture is certainly infectious, right? And so as painful and is as it is, and as much as you would rather spend your time either coding or business development or marketing, you should actually spend the bulk of your time, when you're in kind of that growth phase, certainly interviewing and controlling who you bring into the organization. And it'll sound a little silly to say, but your first employees, the ones you bring in, have to believe in you. They are coming to the Church of Morty, okay, where they believe.
We need to establish the Church of Morty. Go ahead, Michael. Sorry.
And because there's no product yet, right? There's no service yet. There's no company really yet. And the only reason they are joining is because they believe in you, the founder and CEO of the company. And so to build kind of that loyal initial employee base that shares your values is kind of the lifeblood of a startup. Eventually, the company is going to develop the product or service, right? There will be some things, and then you will be able to hire and attract and retain talent because of the things you're working on. So it no longer kind of has to be that church of the CEO, right? Where you can start believing in the company and the product more than the CEO. But early on, you really got to find those people that like really kind of work with you. And I think that's a huge key to kind of getting things started.
Any other key lessons? I mean, obviously, avoiding the flip side of what you said, would be a good lesson. But anything else that you would, want to share about, something that maybe you wish you could have done differently or thought about differently from the get-go?
I obviously like you think you're ready, but you're never really are ready when a crisis hits. And especially if you've had success in your company for a number of years, and you're growing and doing kind of the right things and whatnot, and then like something happens and things go wrong, right? And it's even for a CEO that's been there for a number of years, like until the crisis hits, you actually have no idea how you yourself will even act, never mind how it ends up impacting kind of your employee base. And I think first time CEOs, especially with a relatively kind of like young group, I think there are certainly tons and tons and tons of lessons that I can think about. How would I handle something like that if it were ever to happen again? At the same time, I think there is some value to having mentors, to having a board that has kind of been there, done that, to kind of help you walk through. Here's how I handled it. Maybe this is applicable to your situation. Because if you have nobody around you, like you will just flail like a fish out of water. And that does not help the situation kind of in the slightest, right? And so I would certainly, obviously open communication and whatnot is incredibly important, but it's also the value of when things go wrong, do you have somebody to talk to? Because CEOs, is a lonely position. You cannot share obviously your doubts and fears and what keeps you up at night with your workforce, right? You have to maintain the optimistic, hey, everything's going to be okay, kind of that attitude. I think that's obviously important to doing it, but having kind of that group of people you trust, even if it's only one person, will, I think, certainly make your management a lot easier.
Who of us has not gone through challenges? How do you think about self-care? Obviously, if your cup is empty, there's nothing to pour out of.
Yeah, it's funny. You know, I was fortunate to have had jobs and positions in companies that I loved. And where, yes, it was work, but it was also fun at the same time. And that largely speaks to the people that you were working with, right? Which kind of and then goes back to the people you brought into the organization. And so for me, in the crypto space, I'm sure even today, like work life balance is not really a thing, right? Like crypto trades 24/7. It has no holidays. It doesn't really care. And price can spike 10, 15%, or it could fall 20, 30% at any kind of given time. And you have to kind of be on call to be able to do it, right? But like for me, knowing that whatever I'm dealing with at that point in time, I'm dealing with people who care just as much as I do, and make it fun. As I think about it, is it goes a very long way. If work feels like work at that point, you will be burned out. There's no question about it. But certainly in my younger years, where I only had work, and as I've gotten married and I've got my three children, just kind of spending even 5-10 minutes being daddy, I think is therapeutic,
Mm.
from time to time as well. And so again, but it's about people, right? It's whether it's my coworkers and colleagues or family. Those are finding like little escape valves, is incredibly important, even if you don't have the time to play golf or whatnot because you're working. That just having the circle of people you surround yourself with, I think, is incredibly therapeutic.
That's really amazing. Do you also have any passion projects, or really like this is currently your focus these days?
I between my children and the family and the job, I really don't have too much other things to do, but like that's because I found things I enjoy doing,
Ah,
right? And so when work becomes your hobby, that's probably the best you can certainly hope
it's
for.
age-old wisdom, right?
Right, for sure. And frankly, even when I'm not working, my mind share is largely about crypto stuff and things like that anyway. So my mind naturally kind of gravitates to this, which tells me that I'm in the right space. That certainly kind of keeps me interested and motivated for sure.
That's amazing. Michael, thank you so much for joining me today. As a final word, if you want to share with our listeners, if they're looking to connect with you or your firm, what's the best way they should reach out to you?
Sure. So I'm on Twitter, under or X, I guess. Michael Moro, just kind of one word. The company's website that I represent, inx.co. And then you can find me on LinkedIn or whatnot. I'm fairly reachable. So happy to chat about tokenization. Happy to chat about crypto, and anything else.
Amazing. Ventures and Visionaries is grateful to be sponsored by KJ Technology. KJ Technology approaches technology through a business lens and operations. Their technology advisory, cybersecurity, and proactive process solutions are designed to solve your real-world challenges. For a complimentary consultation, please email info@kjtechnology or call 646-556-6500. You too can find them on LinkedIn or all the rest of the socials. Thank you, everybody, and thank you, Michael.